Welcome to Economic Deep Dive, where we break down the world's biggest financial events and hidden economic truths. In today's video, we explore China holds $3.2 trillion. Why they can T-dump it, the financial trap explained. Get ready for a clear, powerful, and engaging deep dive that reveals how global markets, money systems, and real-world events truly connect. Stay until the end to understand the full story. China's relationship with the US dollar is one of the most important, most misunderstood, and most dangerous financial connections in the world. Right now, China holds more than $3.2 trillion in foreign exchange reserves, and a huge portion of that is in US dollars, including over $800 billion in US Treasury bonds. People often ask a simple question. If China and the United States are global competitors, why doesn't China just sell off its dollar reserves and weaken the American economy? The answer is deeper, more complex, and far more interesting than it appears. China is locked inside a financial system that it helped build, but now cannot escape. To understand how this happened, we need to go back to China's economic rise. For decades, China became the factory of the world. Every time an American bought a product made in China, dollars flowed out of the United States and into China. Year after year, trade surpluses stacked up like giant mountains of US currency. China didn't want to keep all those dollars just sitting around, so it did what almost every export-driven country does. It recycled them back into the United States. China bought US Treasury bonds. America got cheap financing. China got a safe place to store its wealth, and the cycle continued. This is one of the most powerful financial loops ever created. China exports goods to America. America pays in dollars, and China reinvests those dollars into American debt. It sounds simple, but it's the foundation of a global system worth trillions. And it's also the trap. If China suddenly dumped its dollars, it wouldn't be America that collapses first. It would be China. Because more than half of China's national wealth, the savings they built over decades, is denominated in dollars. If China sold those dollars aggressively, the value of the dollar would fall, and China's own reserves would lose massive value instantly. They would be destroying their own savings. Another issue is size. The US Treasury market is the deepest, most liquid financial market on Earth. There's no other place China can move that much money. Not Europe, not gold, not the yuan, not anything. If China tried to shift even a small portion of its holdings too quickly, the entire global market would panic. Treasury prices would crash, and China would lose billions before the US even felt the impact. China also depends heavily on a strong dollar because its economy is driven by exports. Strong dollar makes Chinese goods cheaper for the world. If China forced the dollar downward, its own factories would suffer. Millions of jobs could vanish. The government knows this, and it is one of the main reasons they cannot simply walk away from the dollar. And then there's the global financial system itself. If China dumped treasuries, global interest rates would spike. Credit markets would freeze, and the world could enter a recession. That recession would hit China first, because China relies on global demand to keep its economic engine running. So even if China wanted to hurt the United States by dumping dollars, the blowback to China would be immediate and severe. Over the last decade, China has repeatedly tried to escape dollar dependence. They increased gold reserves, launched a digital currency, expanded Belt and Road lending, and pushed for BRICS alternatives. But none of these attempts have replaced the dollar. Gold is too small. The digital yuan lacks global trust. Belt and Road loans are still demanded in dollars. And a BRICS currency is far from realistic, because no country wants to tie its economy to another government's political decisions. Every escape route leads back to the same place, the dollar. What makes the situation even more interesting is how the United States benefits from this dependency. China buys US debt, which keeps American interest rates lower than they would be. Because so many countries store their wealth in dollars, the US can run deficits that would destroy other nations. And the dollar stays at the center of global trade, giving the United States unmatched power over global finance. China is America's largest competitor, but also one of its biggest lenders. It is a strange relationship, a mix of rivalry and dependence, power and vulnerability. If China tries to exit slowly, several things happen. The yuan rises in value, which hurts their export industries. Global investors panic and buy even more dollars, undoing China's efforts. And China's own financial system faces instability because its banks, companies, and trade still rely on the dollar. Even a gentle exit creates problems that China cannot afford. So China continues the same strategy: criticize the dollar, complain about US dominance, and quietly keep buying or rolling over US debt. The dollar trap stays in place. China can talk about a new world currency, but the world still trades, invests, borrows, and saves in dollars. Despite technological advancements, global partnerships, and new financial tools, China remains locked inside a system it cannot break without breaking itself. The irony is stunning. The currency China wants to escape is the same currency that helped them rise. Their economic power is tied to the dollar. Their reserves depend on the dollar. Their exports depend on the dollar. And the global financial system remains structured in a way that strengthens the dollar's position year after year. For now, and likely for decades, China will remain in the dollar system. Not because it wants to, but because it must. Both nations are trapped together in a financial relationship too big to unwind, too interconnected to break, and too important to abandon. And that is the real story behind China's $3.2 trillion, a story of power, dependence, vulnerability, and a global system that no one can escape easily.